I was looking through my crypto charts last night and I noticed something crazy. There is a trend that is repeating, a trend from 2023 that almost looks identical to the current price action, which I believe is foreshadowing the next move in the market. If you can understand this trend, then you'll have a massive advantage when it comes to understanding what comes next and how to position yourself for that eventuality. So in today's video, I'm going to run through the charts that you need to be looking at right now if you want to succeed over the next 6 months and beyond in crypto. And I'll also be talking about the current macro environment and how that is impacting the charts. And of course, what altcoins I am currently looking at to capitalize on this trend, when I'm buying them, when I'll be selling them, and much, much more. So if you do enjoy these type of videos where I help you get a leg up on your competition, make sure to click that notification bell so you don't miss a single upload. I'm here every single day to give you the best early crypto alpha in the world. Firstly, let's take a look at the Bitcoin chart heading into the week, and then I will show you my more macro setup that seems to be eerily unfolding in front of our eyes. Looking at the Bitcoin chart right now, you can see that this 60K level was reclaimed briefly for a day, and then yesterday we ended up coming back down below this level. So we're exhibiting this choppy price action right now, which is honestly really difficult to trade because the market can't seem to make up its mind in terms of directionality after that major dip. So you guys will know a couple days ago, I made my video outlining my full strategy. Basically, I talked about how if Bitcoin could maintain above the 60K region, I would conservatively look to get into longs as long as the specific altcoins I was interested in longing also showed confluence with Bitcoin. We got the Bitcoin confluence, at least for a day, but many of the altcoin setups didn't end up confirming. And the only one that really did is Sui, and Sui's actually up on the day. So I'm still in the Sui long. The other positions didn't fully validate, and there was one position that I decided to cut over the weekend just because things are a little bit choppy. So my advice last week when I said that you should use the rally as an opportunity to stack up on some stable coins if you are underweight and you were scared during the capitulation that we got still remains true today. We're still substantially up off the lows. So if you are in a position where you're in profit from potentially bottom buys or even just in your portfolio overall, and you want to protect against a potential revisit of those lows, I definitely don't think that's a dumb idea. And in terms of short-term altcoin trading, I don't believe there's a need to force anything right now. I have this tweet here where I say, if you're not sure whether this is a scam pump or a true reversal, you don't actually need to know, because in this market, you shouldn't be forcing trades. You should only be getting into a position if the stars align on a trade. And remember that no position in this market is also a position. Sometimes sitting in cash or sitting in spot is the best play over the shorter term until the stars align on a trade, which they are, by the way. We're going to talk about that trade in today's video in just a minute here, because that is really what I'm prepping for. All of the shorter term stuff is just noise, and it is a pretty difficult market to trade, admittedly. You can see that Bitcoin open interest has actually been declining. Not a lot of people are showing significant interest longing into this zone. We did see a slight sell-off this morning, nothing crazy, but there's really not that much interest or volume in the market right now. Over the weekend, it was one of the lowest volume periods I've seen in quite some time. This is really a case, and we did discuss this last week, of the dust starting to settle after the storm. The storm was obviously that major capitulation event on Monday, and I think the market is a bit hesitant to pour into a specific trade, whether that be long or short, because things are still waiting for a bit more clarity and a little bit more direction right now. And there's also, on the altcoin side, I think a clear lack of narratives that are currently abundant in the market. Maybe aside from memes, which are always there in the background, we aren't really seeing any driving narratives like, we have this year with things like AI and RWA. There's this tweet here that says, in the past 3 months, we've seen RWA coins going to zero. Well, Mantra, Ondo, the main ones haven't gone to zero. In fact, Mantra's, I think, still near its all-time high, so only the rubbish coins have gone to zero. But yes, we did see the narrative start to dissipate a little bit. The whole crypto AI sector dying out. Once again, strong language. I think the leading AI plays will still be great plays this bull run if you look at it holistically, but they've definitely bled a lot of their gains since March. That is creating opportunity, though. That's something I'll discuss later in today's video when we look at the current setup that is forming. VCs cashing out billions on retail investors. A lot of the new launches, obviously, this year are down. This altcoin dilution is contributing to overall underperformance across the alt sector in its entirety, so I agree with that point. Pump.fund and pre-sales draining billions in liquidity. Also kind of true. We are seeing a little bit more extraction this cycle, especially in the meme coin space with the flurry of new meme coins that are constantly launching and sucking up liquidity. What we have right now is complete silence, no narrative, no clear winner. Most memes are heading straight towards zero. Utility coins already down 90%. And all of this while Bitcoin trades at 60K. We urgently need a new narrative right now, for which some could be early, or else many people will burn their portfolio down to zero. So this is like a negative way to view the market, of course, but I wanted to highlight it because there are some valid points. I think the most valid point here is the fact that there aren't really any clear narratives right now. However, that's not necessarily a reason to be inherently bearish on the market, because you have to remember that in crypto, price tends to lead narrative, not the other way around. So the way I look at it is once prices start to move upwards in the altcoin market, narratives will essentially be created based on price action, and that becomes self-fulfilling. Let's say a couple AI coins pump, then that starts to develop this narrative around AI coins, and then more coins start to pump because the narrative is now building, right? But that all happens from price moving. So I don't like to view the market too much in terms of narratives leading. I view it in terms of price leading, but it's definitely valid to observe right now that the market is quiet. And obviously a lot of retail interest has dried up, and shakeouts definitely don't help because retail gets disheartened by the shakeouts. They lose money. Interest in crypto is largely based on portfolio performance. So when you're down, I understand that there's less of a motivation to grind, even though that's kind of counterintuitive because these periods are great periods to grind. But I do understand it from a retail perspective. I also want to read out this tweet about narrative, and then we're going to go on to my thesis here on the market based on a chart pattern that's repeating. It says, we're currently in a phase when there's a noticeable lack of compelling narratives driving the crypto market. This isn't new. After riding a few big narratives for months, like the Bitcoin ETF, the AI bubble, the market often hits a point where it lacks clear direction. But since participants always need something to latch onto, they tend to create new narratives to fill the gap. The process is especially easy in periods of low liquidity where moving prices becomes less challenging. So we've kind of seen this with the L1 rotation recently, with a few L1s starting to catch up. So I would keep my eye on these almost popcorn trends that pop up out of nowhere and create like mini echo bubbles across specific sectors. I think over the next few months, if you're a shorter term trader, that would be my focus. Looking at L1 rotations, for example, the Sui trade over the past couple of weeks, or looking at meme coin subsector rotations, those kind of things can keep you actively engaged in the market and can give you the opportunity to profit. So that's something I'm actively looking at those opportunities as well in my Discord, where I post a lot of this stuff. In summary, when there's no dominant narrative, it's easy to create one. A bit of hype around a previously strong narrative, given the right environment, can lead to the birth of a new one. Understanding this dynamic allows you to position yourself ahead of the crowd, recognizing when narratives are genuine and when they're simply a result of low liquidity and the market's need for something to believe in. The latter is something you're going to see crop up a lot over the next couple of months, especially if this thesis I have starts to play out in terms of price action. So that's something I would be aware of. Don't get too sucked into short-term hype and short-term price action. Definitely use those periods of mania in specific sectors to make money. But over the longer term, it's best to position your portfolio in more of a robust manner, taking into account the cycle's entirety. So now that my market update is out of the way, let's talk about something that I've noticed. This, I think, is a really important segment, maybe one of the most important segments I have had on the channel in quite some time, because I think if you follow this game plan, it's not necessarily going to align exactly like 2023, but in my opinion, it will rhyme, it'll roughly align. I think you could do really, really well this cycle. Interestingly, we're not deviating that much from previous cycles. If you look at this chart here, you can see that Bitcoin price performance is pretty much in line. It's the purple chart here, which is market cycle number 5 on Bitcoin. It's pretty much exactly where the previous 2 cycles were, which is interesting. This chart in and of itself highlights that the rapid parabolic expansion phase for the market hasn't happened yet, but there's data that suggests that could be the case very, very soon. This isn't the chart I wanted to show you, by the way. This is just an additional point, just to remind you that we are currently on track in terms of Bitcoin and the cycle. The chart I'm going to show you is pretty crazy. Firstly, I just wanted to remind you, you've got 1 day at the time of uploading this video to take part in the Belofen Spinner campaign if you haven't already. What is it? If you sign up, deposit $100, you're going to get 10 Sol airdrop to your account. If you're part of the first 100 users, I believe last time we checked, like 85 had deposited. So there's still 15 slots for new people that want to deposit over the next 24 hours. You're going to get a chance to spin the wheel, win potentially 15 Solana, which is valued at over $2,000. And if you want to keep trading, you can keep earning spins to spin again. So basically a free way to get $10 worth of Sol. The good thing is, since there's only 1 day left on the campaign, you just need to deposit, hold it in your account for just 1 day, then you can take your $100 out and you're going to get $10 free worth of Sol and a spin out of it. So it's basically free money, so to speak. There's a link in the description down below if you want to sign up to Belofen, to non-KYC exchange, which is obviously great. So this is the chart I want to show you. On the top is the Bitcoin chart from October 2023 to where it is currently. On the bottom is the Bitcoin chart from October 2022 until October 2023. Are you noticing anything? I am. The price action on Bitcoin is extremely similar to the exact same price action that we saw last summer. In fact, it's almost identical. So it's interesting here that from a cyclical perspective, Bitcoin throughout the summer months is following basically the exact same playbook from 2023. The reason why this is important isn't because of the fractal itself, because we all know fractals can kind of be like voodoo in crypto, right? They can rhyme, but they don't necessarily play out. The reason why this is important is more from a sentiment perspective. Let me explain what I mean. You can see here that the range in 2023 lasted for roughly 160 days. The range that we are currently in has also been going for around 160 days. During this time period, you had price action where Bitcoin had massive expansion, a sideways chop, bleed, pump. Just like this cycle. Massive expansion, sideways bleed, rally. Then sideways price action before a dump, sideways price action before a dump. Pretty much exactly the same as 2023. What happened afterwards? Well, you had a period of sideways choppy price action throughout August, September, and October. It shook a lot of people out of the market. It was extremely low volatility. And then we had massive expansion to the upside. What's happened now? We've had that initial shakeout, which actually happened on August 4th. Last year it happened on August 16th. So pretty much the exact same time period here. And now there are signs that we're starting to get low volatility across the markets. If the weekend is anything to go by, the next few weeks and maybe months for crypto could be extremely low in terms of volume. Now, why does this matter? In 2023, what happened? I don't know if you guys can remember. During this period, retail became completely disinterested with the market. Now, some altcoins were holding up, some were bleeding out versus Bitcoin, but it wasn't the price capitulation that got to the market. It was the time capitulation. They were waiting and waiting and waiting for their bags to do something. And time again, it was just a fake out. Time and time again, it was just a fake out. And eventually, they got sick of the market. So when it came to the August to October period, this sideways price action shook out a lot of people. They became disinterested, even though these, funnily enough, were their last amazing opportunities to accumulate altcoins. If things play out similarly to 2023, the fractal that is in front of us, from a sentiment point of view, I expect a very similar thing to happen. Remember, the reason I think sentiment will be this similar to last year is because the price action is similar. So it's not the price action itself that I'm so concerned about. It's retail's reaction to price action, because general sentiment in the market and the general reaction of retail is what's going to drive prices. So if you get a sideways choppy period like we did last year, you can assert that retail is going to get bored. Once the market starts to wake up, you can kind of start to foreshadow the reaction. It was basically apathy on the initial pump, and then people eventually got more and more confident and started buying into the rally. Interestingly, this time around, you definitely have macro data, which we'll discuss in a second, and positive tailwinds, which could catalyze the rally that retail will eventually get interested in. If this fractal is playing out again, then we have about 50 days here until the beginning of Q4 in October to position ourselves before a potential expansion in Q4. Now, I don't know if it's exactly going to be day one on Q4 that the market starts pumping, because look, last time, basically what happened is we had one final shakeout, and it was only until the second half of October that we had massive expansion. And history doesn't repeat, it rhymes. This price action is definitely rhyming. I mean, you can see it in front of you. It looks extremely similar, right? It's extremely similar. The sideways range, even the order of the pumps, then the dumps. Like, look at this period here, right? It's pretty crazy when you actually think about it. This period here on Bitcoin is extremely similar to this period here in 2023. This rally out of that downtrend is extremely similar. This part is extremely similar to this part. Like, it's pretty crazy when you actually think about it. Where things start to deviate a little bit is last year we chopped sideways. This year we had expansion, then a fake out. But I do expect similar price action to happen before expansion to the upside. If this is the case, that basically makes it 50 days of potentially boring low volatility price action. What happens during those 50 days? And it could be a bit longer, it could be a bit less. As I said, it rhymes, it doesn't repeat, but there is a general period now. Well, during that period, let's say 50 days, there's going to be, because it's low volume, there's going to be some volatile moves on low liquidity altcoins. So you're going to see spikes to the upside and spikes to the downside. You're going to see that popcorn narrative boredom stuff happening, like I alluded to before, of like certain narratives popping out of nowhere because the market's bored and they need something to cling on to. You're going to see capitulation on a lot of alts, because actually what happens during these time periods is some alts actually bleed out. If you look at Aptos, it actually bled out versus Bitcoin during this period. I know it had a lot of unlocks, so it might not be the best example, but especially for the high FDV altcoins, some of the newer launches, they're going to bleed out a lot. Those are actually some of the ones I'm looking at accumulating during this zone, because the market basically just gets bored and retail pukes positions they don't have high conviction in. So now is a time where there's actually massive opportunity, because if we do get this sideways period where there is capitulation amongst certain altcoins and there is choppy conditions where you get opportunities to add on extreme red days, this is a great accumulation period to position yourself for Q4 and next year. I'm going to get into exactly how you can do that in a second. First, I want to add a little bit more data to my thesis here, because I understand that me just looking at a fractal and talking about sentiment may not be compelling enough and probably isn't justifiable enough to explain why there could be an altcoin move in Q4. There are actually two other major factors at play here. Well, there are many factors, but there are a couple in particular which lead me to believe that the best times are ahead of us and maybe sooner than you think. The first one is the cyclical nature of the market, as we just discussed, how Q4 is typically a better performing month, and obviously how that aligns to the charts here. But the second one is extremely important, and this is global liquidity. So in case you guys don't know, crypto, Bitcoin specifically, is more correlated to global liquidity than it is equities, real estate, bonds, gold, commodities. There was actually a study that I unpacked on this, I think about a year ago, where it showed that the correlation coefficient of Bitcoin to global liquidity was the most correlated in the 99th percentile versus other asset classes. Meaning, if you want to track Bitcoin's price performance, anticipate supply increases and reductions in global liquidity. That is going to be long-term because it might take a couple of weeks to recorrelate, it might uncorrelate it at times, but over a longer time horizon, I'm talking many months, this is the number one constituent of market movement. Now, there is some current macro chatter from the macro podcast that I've been watching, the macro analysts that I follow, that global liquidity is set for an uptick in the second half of the year, which has already begun. You can already see this playing out from June. We've already upticked on the global liquidity index. This, by the way, is an indicator that anyone can add to their chart. It's the global liquidity indicator here, global liquidity index by INGE4 if you want to add it. It's fantastic. You can overlay it with your Bitcoin chart. Obviously, 2020 was insane in terms of the money printing during that period. Global liquidity spiked. Then many central banks started quantitative tightening. This has resulted in liquidity decreasing. But what we're seeing now are the central banks pivoting, obviously in the face of slowing economic growth and macroeconomic issues, which were well documented last week. And we've started to see a response. Rate cuts are going to be happening over the next few months from the US, European Union, many other central banks are all going to be cutting rates. Global liquidity is also speculated to be on the rise during this period. If we do get something like this, where global liquidity upshoots, this would be very good for Bitcoin, as you have to remember how correlated Bitcoin is with liquidity. I mean, just look historically at how closely Bitcoin has followed the liquidity index. It's remarkable. The only deviation you do have at times is one might front run the other. For example, during 2020, government started printing money as a response in March. Bitcoin started rallying later in the year because risk assets originally sold off. So that created a discrepancy of a few months in this period, but it quickly evened out once that liquidity started to have a tangible effect on the market. Because you have to remember, risk assets in general, like equities, but Bitcoin especially, is a liquidity sponge. It's extremely sensitive. We even saw here, the second liquidity started to decrease, Bitcoin started to go into a bear market. When we started to see an uptick here, Bitcoin had a strong leg, obviously also being fueled by the spot ETF. So if we are to see liquidity conditions bounce, this would be a positive catalyst for Bitcoin. There are a few other catalysts I want to discuss now, which Fabian talks about in the market commentary channel. He says, on larger timeframes, I remain optimistic that we are nearing the end phases of a multi-month correction. It's been 6 months actually for altcoins, for the following reasons. Global liquidity, as I just mentioned. Number 2, Trump odds have completely reversed from his lead against Biden and are now more likely to mean revert back up. Keep your eye on the debate. Seasonality entering a stronger period after September with altcoin drawdowns that are already in line with previous resets. That's something I just discussed on the fractal, but also on the Bitcoin quarterly returns chart. Bulk of the major, and this is very important, supply distributions from the last couple of months are now over with only 2 bill left in GOX, also the German selling, also the US Silk Road selling. And finally, the second wave of ETF entrants expected, with major wealth advisors now allowing Bitcoin ETFs to be pitched to their clients. Morgan Stanley was the first one to report they will open doors soon. That's pretty exciting, by the way, because now suddenly you've got this new class of asset managers recommending Bitcoin to their retail clients. If you are interested in this additional macro insight, by the way, I'll leave a link in the description if you want to sign up for the Mars High Club, which is my exclusive Discord community. Lots of alpha in the group, and Fabian is our amazing macro analyst. He also posts altcoins and stuff like that. So there's a link there if you are interested in joining. But these are definitely reasons to not be bearish heading into Q4, but actually be quite bullish. But then on the charts, we're seeing more apathetic conditions similar to that of 2023. So all this evidence alludes to me that this is actually a very strong, over the next couple of months, accumulation period. And it's an exciting accumulation period. Why? Because we are finally getting big opportunities in the market. Obviously, there's been opportunities in June, July, August, but the reset that we recently got has reset a lot of charts that were slightly overinflated, and a lot of quality altcoins are now at levels that are significantly more attractive from a risk-reward perspective when we do look at the next few months in crypto. So what is my personal plan from a macro perspective to play this? It's quite simple. I've got my watch list. I've put a few coins here, for example, that are strong. Obviously, the meme coins, PEPE, MOG, with POPCAT, Sol, Render. There are many more I'll be discussing in future shows, but today's video is not about the specific altcoins I'm buying. It's about the strategy. I've got my buy list on TradingView. I've got my high time frame level set. When we get major red days like we got last Monday, and if these conditions are what I think they're going to be over the next couple of months, then there are going to be shakeouts. We may even revisit the lows. There may be days of extreme red and extreme fear because that's what apathetic conditions do to the market. People puke their positions, not out of price, but time capitulation, which ironically gives you price-based opportunities. So I've got my watch list ready. I'm going to continue to accumulate on major red days. The thing to keep in mind as well is there's no need to rush positioning. So there's kind of two approaches you can take to the market. And I think they're kind of symbiotic. I don't think you need to pick one or the other. The first approach is buying on major red days. Like I've always preached, big periods of bleed out. You can accumulate quality altcoins. Quality being altcoins with a strong narrative and a strong community and a strong trend that ran earlier in the year that are likely going to run again. That's the first prerequisite. The second category is the altcoin trading side of things. And this can also be done with spot trading, whereby your goal as an investor is to really maximize the parabolic stage of the run. Let me contextualize this for you. It took 135 days from range low to move up to the breakout of the altcoin tipping point back in December 2023 before we eventually broke out in January, earlier this year. That was a 45% move in 135 days. In the last 19 days alone, put this in context, 135 days to make 45% move. We almost made the same move in just 19 days at the end of the parabola. And I do believe the parabola that could be to come is likely to be bigger than this in terms of percentage gains. What does this mean? It means that the biggest moves actually happen towards the end of a run, which actually means you don't need to rush positioning. So yes, accumulate quality assets on red days, accumulate some decent spot positions, but if you miss the move off the bottom, you could find solace in the fact that you don't need to time the bottom. Because if it is a true reversal, if it does end up being a true reversal, right, you've got adequate time to position to take advantage of that last parabolic leg. Especially if you're a trader, you'll likely be getting some really easy mode continuation long setups during that final leg, which gives you the ability to make profit, right? So there isn't actually the intrinsic need to rush positioning right now. You don't need to rush, oh, is it time to buy? Do I need to buy? Like, you can relax, wait for the right setups to present, and keep in mind that even if you do miss the initial move off the floor, there's still going to be so much time during this final parabolic period in the market, that might not be till Q1 next year, to take advantage of trading opportunities during that time, as long as you're taking profits during that period and making sure that you're maximizing it and not DCAing near the top, right? So you want to have your spot positioning already set through major dips, and your trading, you really want to maximize once that confirmed uptrend is in. And there may be some investors out there that you might not like buying dips, and you might, because I don't know. I don't really understand the psychology because you should love buying dips in the market, but there are those out there that feel really scared and don't want to do it. That's even fine because you're going to be able to take advantage towards the second half of the run, even if you do miss the ideal accumulation opportunities. You might not make as much, but you can still make money. It's kind of the Pareto principle, like 80% of the move happens in the last 20% time-wise. This makes the next 40 to 50 days, maybe it's 2 months, maybe it's 3 months, because as I said, history rhymes, not necessarily repeats, extremely important. Because this period is your accumulation period that will hopefully set yourself up for the next leg of the bull run. And there's really no need to rush things. You're in a great position. If you're watching this video, you're still in the market, you're still locked in. I've got to applaud you because many of the viewers have dropped off, but that's because you're serious about making money in this market. And the ones that are serious during times of apathy, just like those who were serious in October, November last year, they're the ones that make a lot of money. Like my best sol entry was during that period at $14, during that apathy period. My best, I think, Ondo entry happened in December. My best Pendle entry happened at $1 back then. All my best entries happened during an apathetic market. So if you're here now, that's great. If we do get continued apathy over the next month or two, that's also going to be a great opportunity for you to accumulate. If you are serious as well, you might want to consider clicking the link below to join the Mars High Club, because that is where I do post a lot of exclusive alpha alongside all of our contributors. I actually do post the reports from these shows, so we get the transcript and then we make it into an AI summary before the shows even go live with the altcoins that I speak about. That will particularly be useful when the market starts to heat up and there are more opportunities in the market naturally. Hope you enjoyed this video. I'll leave a link in the description below to any necessary resource. I'm going to see you every single day, and we're going to keep smashing it together in this market. Hope you have a lovely rest of your day. Good luck in the markets. If you're in the Mars High Club, I'm going to head over there and answer some questions right now. See you later. Peace out.